Well, absolutely nothing to complain really, across the board, whether it was the revenue growth, EPS, as well as the guidance, it's two thumbs up from Accenture. Revenue growth of 27% in Q1 at $15 billion. EPS has come in with a 20% growth year on year at $2.78. New bookings that Accenture has reported has come in at a record high of $16.8 billion, which is a 30% growth. And as you said, the highlight really is that Accenture has raised their full year revenue growth for FY22. They have now a growth expectation of 19 to 22%. Morgan Stanley, in fact, says it's a material beat on earnings and positive commentary on demand. Credit Suisse says despite record bookings, the management still has a healthy pipeline going ahead. And 1/3 of the industry has implemented compressed transformation, and this is a strong multi-year cycle. Infosys, TCS and HCL Tech are the preferred picks. But let's get someone who has perhaps called this upcycle way back in time. Sandip Agarwal of Edelweiss Securities joins us now. Sandip, every time we speak to you, the environment just gets better and better in the IT space. And we ask you the exact same question, is all the good news in the price? This time around, what do you think?
So I will give the same answer that there is 3 more years of upcycle and people will keep on making money. Investors will keep on making, traders will keep on missing the opportunity maybe. I think the good thing to see in the numbers is not the guidance upgrade. The good thing to see in the numbers is the guidance upgrade which has happened first quarter itself. And it is not a small guidance upgrade. It is a massive upgrade in the guidance, almost 30% if you put it on the base. So I think that is what needs to be seen. The bookings and everything obviously are very, very robust. I would only like to reiterate that, in technology, and I come from technology background, I have been a technology entrepreneur. You cannot have something which can only happen for 3, 4, 5, 6 quarters. Generally, tech implementation takes 4 to 5 years minimum. So you have to see the cycle in that perspective. And stocks are just a derivative of the business. So I think business is extremely good and it will continue to be good for next 3, 4 years. And the stocks will keep on surprising both on numbers and both on the returns. That is the way I would put.
Sandeep, now we understand. This morning, you were a techie at heart. I didn't know that you were a tech entrepreneur. No wonder you call the cycle ahead of others, right? You really know it inside out. Okay, let's talk about the here and now while we take the larger point that you think this is going to continue for a while. Let's talk about the next quarter or maybe, getting into FY23. Purely in terms of a very strong deal pipeline and solid top line growth, who can perhaps surprise on the upside?
So I will answer it in a different way. It will be impossible or 10 times more difficult to disappoint for any company than to positively surprise for next 2-3 years. So you buy any good name and it will give immense returns. That is the way I will put.
Okay, but still, some numbers perhaps. See, for instance, Accenture is now talking about growth of up to 22%, the full year revised guidance. So let's say if you're looking at Infosys or TCS, which are the companies that will give that maximum sort of delta on the top line itself?
So I think this has to be seen in this perspective that, TCS, Infosys and HCL, all these large names, I think they should be between 15 to 18% revenue growth for next 2-3 years. So there is large delta there. I don't think Street is discounting that kind of number. And mid-caps like Mindtree, LTI, LTTS should give anywhere between 20 to 25% revenue growth. And remember, in IT, what happens is after 15% growth, every 1% revenue growth rate generates 3 to 4% of EPS growth. So if TCS are going to give 15 to 18% growth, then you can think they can give 20 to 25% PAT growth. And in mid-caps like Mindtree, LTI, LTTS, if they give 20 to 25% revenue growth, the PAT growth will be between 30 to 40%. And some of the small names like Gensa, Birlasoft, Firstsource, they can give even higher returns in terms of earnings and growth. And stock return will be a factor of both. It will be a re-rating plus whatever earnings growth comes. So that is the way it should be.
Sandeep, hi, good morning. Since this conversation is on the back of what Accenture is reported, could you tell us where Accenture, what PE multiples for something like Accenture, which is delivering industry-leading growth, are at as compared to top IT services companies here? What is the normal difference in valuations and where are we now?
So see, generally Accenture used to trade at a slight discount to TCS. I think now that discount has gone away, and so it is now very close to 25 to 30 times, depending on which year you are looking at. But if you see 1 year forward, Accenture will be between 25 to 26 times, and TCS will also be around that number. In my view, TCS can easily go to 30, 35 times or 40 times because, they have not, they are going through some changes in their technology stack. They are doing some changes, and that's the reason probably, they have not been able to give the kind of numbers which Accenture has given. But I am very confident that in next 1 or 2 quarter time, you will start seeing big jump in growth rates of TCS also, and Infosys already is delivering good and it can further go up. So I think, all this Accenture, TCS, Infosys, the fair multiple is around 40 times in my view, because the PAT growth itself will be 25% for next 3 years. And if there is a clarity of 25% PAT growth, a 1.5 to 1.7 PEG ratio is very reasonable PEG ratio in my view.
Okay, one final question before we run out of time. Sandip, there's so much happening in the mid-cap IT space, especially these companies that have an exposure to the electric vehicle technology. So whether it's KPIT Tech, Tata Elxsi, you see further gains for names like this?
No, see, it is a very valid question, and there is a lot of demand in that space. And in fact, not only electric vehicle, anything which is connected to Internet of Things, and electric vehicle obviously a big component of that. There is a lot of money which has been made, and there will be a lot of money which will be made. Only thing is that, the stocks are so expensive that it looks scary. Like Tata Elxsi is like 50 times plus now, depending on which year you see. So that is the only challenge. But I think as long as, earnings surprise continue, there will be a lot of money which will be made. And these are all very good, high quality companies which you mentioned. Tata Elxsi particularly is going with 6.5-7% attrition. You can imagine the kind of quality, kind of people who will be working there. So it is a great company. But at this valuation, sometimes I myself feel little scared. But I would only say one thing, that I will also go wrong for next 2-3 years, because I expected Accenture to beat numbers by 2-3%, and it has beaten number much more than that. So means everyone is wrong at some point of time. So I would only say that I only firm believer that tech upcycle is there for next 3 years, and people will continue to make tons of money, whoever have invested in it.
I mean, not making as much money as you potentially could have is a good problem to have, right? Sandip, great to speak with you. Thank you very much for joining us. And Sandip, of course, has been thumping the tables and saying he's extremely bullish now for a couple of years as far as the IT services space is concerned. Okay, 9-10 calls. Shrikant, what do you have in terms of trades?